Welcome to Subramani. Today I'm going to talk about the learnings that I've had about the stock exchange in the US or the equity markets in the US over the last few months, and largely reading about events like GameStop. So the first and the most important learning that I had was the GameStop price. I mean, all of you must have seen this, moved from $4 to $347. What, 80 times plus, 85 times plus kind of a return within a year, right? So this happened because there was a Reddit group which went long on GameStop, and many hedge funds had gone short, and so these people insisted on delivery, and therefore some funds were taken off, and the Reddit group must have made a lot of money. Now, very interesting to learn that this was found by some Reddit user that 140% of the shares were short sold. Now, which means if somebody insisted on delivery, this has to happen. Now, that is very important to understand that this was not based on inside information. Of course, GameStop prosecution will happen, whatever has to happen will happen. He got this information on the basis of publicly available information, right? So if you find out something about any of the companies which you know, whether it's an MNC or whether it's an Indian corporate, whatever, if you can find out something epoch event in that company's life, it can make so much money for you. That's a very important learning, and it is not inside information. Normally you will come out with these kind of stories and say it was somewhere traced to some inside information. Here it doesn't look like it. Of course there's a prosecution. Once the results come, we will know, we will definitely know it better. Second important learning is, in everybody's portfolio, none of us start by wanting a very concentrated portfolio. We will all want a very nice, well diversified portfolio. But I was quite surprised and intrigued to hear Charlie Munger saying that we must have made almost all our money, or a big portion of our money, in some 10-12 shares over a period of time. Now that is an amazing admission that it is the concentration of the portfolio which has helped. And even today Berkshire Hathaway has 46% of its assets in Apple. Now that is a huge concentration, and there is bound to be liquidity risk, because there is no way how Berkshire Hathaway will be able to get rid of so many shares of Apple, right? So that is something which I have seen. So concentration risk and concentration reward has happened. Another important question to ask yourself is, suppose you bought GameStop at $4, would you have held on till the price of 347? This is something which you have to ask yourself and discover for yourself whether you would have done that kind of a thing, and chances are you wouldn't have. Or let us say you bought 10,000 shares at $4, or you bought 1 lakh shares at $4, so $400,000 you invested. Would you be holding all the whole 100,000 shares? No, but you would, because you had a decent quantity of 100,000, you will get a chance to sell at higher levels. So you will sell at higher levels, buy more at higher levels, or go do a sale and wait for the prices to come down and buy it back. I'm not guessing anything about what Tesla should do, can do, will do. I'm talking about you. For you to sit and learn about yourself, saying $4, I'm happy selling out at 8. Somebody bought at 8, happy selling out at 12, right? You do not know. I do not know how many people would be there who bought it at 4 and held on till time immemorial, kind of a 8,000 plus or 85,000, 8,500% kind of a return, right? Most of us could not have. I definitely know I couldn't have. Similarly, when I was looking at the portfolio of many of the fund managers, obviously, like Buffett, for most of us, for you and me also, it would have happened. Most of your money you would have made in a few shares, and we will always be wedded to it, saying, wow, I made so much money in the, whatever, name the company, right? good attitude, bad attitude, I do not know, but yes, few stocks will drive returns. Accept that. Don't say my whole diversified portfolio has to work. It doesn't happen that way. You believe in an index, invest in an index, and then don't worry too much about concentration risk within the index, right? Also realizing in the US they have much better data than we have, but the volumes, daily volumes have just gone through the roof. And for people like us who have seen the ring and the fantastic turnover that time, I'm talking of late 90s, late 80s or very early 90s, just before the formation of SEBI and all that. That is the kind of turnover, 200 crores, 250 crores of one day was considered fabulous. Today, many many broking houses would be doing that, right? And look at how much the average has gone up. It has gone up from 7 billion daily transactions in 2019 to 14.7 billion as of now in 2021. We are talking of just 2019 to 2020 and 21, right? So what are the things that you can do to get into too much of trouble? First of all, don't borrow money. If you have borrowed, if you are investing with borrowed money, it's a very good time to be getting rid of the borrowing by selling some of the shares that you own. Then it's up to you. Then also one more thing I realized, which Indian companies may or may not accept, is the broking firms which give you zero brokerage. It is not as though they are not making money. They are making money because they get something called routing the transaction through somebody, so that person pays money. And very nicely a chart is available showing that Charles Schwab has earned 1.5 billion because of that, and Robinhood has earned slightly above half, and E-Trade slightly under half, right? So all these companies get paid to route their order in such a place. So similarly, our fund schemes being paid by fund houses, or rather the brokerage, which means National Stock Exchange or BSE, so that the transactions are go into a flow in NSE or not go to BSE. Are they being offered incentives? The answer is yes. Do they pass it on to their mutual fund investors? I do not know, right? That's about it. I could have called this learning from equity markets or learning from GameStop. Both mean the same thing, at least for the last few months of what I've been here and what I've been seeing. Thank you.